Hi, this is Emily Ritchie from the Northwest Cider Association. I'm really pleased to host this Northwest Cider Symposium workshop rescheduled virtually. We have a really great program for you today with Janelle Christian and Alice Whitfield from the Office of Outreach at the Alcohol and Tobacco Tax and Trade Bureau. We invited them to speak at the symposium and answer questions at a trade show booth because we know compliance can be very complicated. And with travel not being allowed at the moment federally, they kindly rescheduled this way. So it's a nice intimate situation. And please feel free to ask questions in the chat or put your hand up and we can unmute you or you can unmute yourself. But I'm going to pass it on to these wonderful ladies. Thank you for being here.
Thanks so much, Emily, and thank you for having us. And hello to everyone. Thank you for joining. Let me just first start off by saying we were extremely disappointed and disheartened that we weren't able to be there in person with you. Outreach it's at the heart of what we do. We all love it. And we love being at the events, interacting with you, talking, hearing about your issues, better understanding the cider industry. So really sending our regrets that we weren't able to go, but we are very happy that they were able to sort of pivot and we can do this virtually. So yes, as Emily said, I'm here with Alice Whitfield and also my colleague Jennifer Hill. So I'm going to ask her at the end maybe to turn her camera on and say hello. But with that, we will go ahead and get started. So I will share my screen. All right, and maybe a thumbs up if we look good.
Looks good.
Thank you. All right, so digging in today, we usually do our sort of fundamental compliance workshops as a 4-hour workshop. This is a vastly truncated version of that, where we're just going to hone in on labels, records, and tax tips. And just as a spoiler, we're not going to go through them in that order. We'll go through records, tax tips, and then end with labels. So starting out, any of our presentations will start out with our disclaimer that essentially says that it is the regulations and statutes that supersede anything that I'm going to say today. At some point, this presentation will become obsolete if you're watching it in a recording. Hopefully it won't happen, but if I do have a slip, it is the regulations that govern. So TTB, hopefully all of you are familiar with TTB and what we do, but just in a broad sense, I think it always starts, or it helps to start out with who we are and what we do. So the primary facet of our mission is to collect the taxes. We are a tax revenue agency. So we collect it not only on alcohol, but also on tobacco, firearms, and ammunition. But then we also have this really unique regulatory framework that is a protect the public function. So we protect the consumer by ensuring the integrity of alcohol products. That's really getting at the labeling of the products, making sure that the consumers know what they're purchasing and they're getting what they think they're purchasing. We ensure that only qualified businesses enter the alcohol and tobacco industry. So that's really going to be the registration and qualification to get your permit. And then finally, we prevent unfair and unlawful market activity for alcohol and tobacco products. We really want everyone to be on a level playing field and have everybody have an equal opportunity for success in the business. So we are part of the Treasury Department. We currently have about 450 employees. This is down a bit from what we have had. Our headquarters are in Washington, D.C. Our colleagues in Washington, D.C. are back in the office full-time right now. Those of us outside of 50 miles are still waiting directions. So Alice and I are waiting to see where we will report to. We're currently in Portland, Oregon. The National Revenue Center is in Cincinnati, Ohio. So again, a big office there. And then we also have field offices across the country. That's where our auditors and investigators are. And then we have 3 laboratories in Maryland. So that is our physical footprint across the country. So how will you interact with TTB? First, you would start out, hopefully all of you have your basic permit or that you're qualified as a bonded winery if you need it. Then you would apply for formula approval. Again, if you need it, not all products are subject to formula requirements. And in fact, most, if not many, are not. And then you're going to produce your cider products. And all along, you're going to keep records. And we're going to dig into the records that you need to keep and the format, even in which you can be keeping those records. Then you're going to potentially apply for label approval or exemption. So this is for those products 7% or more, and we'll dig into why that's the case. Then you're going to bottle and remove your products. And again, you're going to be keeping records all along the way. Those records are really important, especially when it comes time to fill out your operational reports, which then inform your tax returns, which then you will do. And then finally, it doesn't necessarily go here in the flow of things, but there are certain changes that you would need to report to us after you are qualified originally. I'm not going to go into those today, but if you do have questions, just let any of us know and we can talk you through those changes that would trigger a notification to us. So just really quickly, the three offices that you would mostly interact with us are the Office of Permitting and Taxation, Headquarters Operations, and Field Operations. So Permitting and Taxation is our National Revenue Center. Here's our contact information. So that would be where your operational reports, your tax returns, and any claims for taxes go. And I will present, or I will share this deck so that you all can have it and use it as a resource. So we have hyperlinks in here throughout, references. So we really want you to be able to use this as a handy educational and reference tool. So the next one is the Alcohol Labeling and Formulation Division that I wanted to tell you about. So this is where all of the formula and label approvals go. So this might be the office that you might interact with the most, that or probably the Office of Permitting and Taxation. And then finally, the trade investigations I wanted to mention to you. So trade investigations, that's our investigators. So you all are likely located in Western 2, which is I'm going to call it salmon colored. And Alice is a representative from Western 2, so your local friendly investigator. And in addition to Alice, who I believe put her contact information in the chart, we also have the list of all of the trade investigation contacts. And then finally, our market compliance office. This is a helpful office because they do advertising reviews. And if you are questioning whether or not your advertisement is in compliance, if you are subject to advertising regulations, that would be for products 7% or more in interstate commerce of alcohol by volume. They do have a pre-clearance service. So if you're wondering if it meets the requirements, they're a very handy office to get to know. And then also trade practices, which we're not going to go into today, but they do have a trade practice program manager there. And so the email box is there if you have questions regarding trade practices. So I wanted to quickly go through this. If you do have questions for us, contact the Office of Outreach. That's a web form that will go directly to me, to our inbox. So any questions can always go there. Right now, because we are not currently traveling, we don't have any upcoming outreach events listed, but that is where you would find those. And then subscribe to the TTB newsletter. The TTB newsletter is a great source of information for anything going on with TTB. If there's regulatory updates, rulemakings, hot compliance tips, offers and compromise, if there's enforcement actions. So those you can always find in our newsletter, and that link will let you sign up for it. And then over on the other side, we do have a couple of handy links there. The bootcamp series, I wanted to flag for you. We have, right now, we're working on publishing a TTB Bootcamp for Wineries series. And right now we have it's going to be a 9-part series. And right now I believe we have 5 of the 9 posted. And they're really helpful because it is for wineries. As we will go through, cideries are wineries under federal regulations. And so there is one on records that I think is going to be really helpful. So if you want more in-depth information on records, definitely check that one out. Or reports and returns is another really helpful one, as well as labeling, which is not posted yet, but we will be posting in the near future. Another really helpful resource is TTB presentations. So we have our 4-hour boot camp for cideries presentation there. So you would just go to the page, click on Cider. It will take you to all of our cider presentations. So it's a more robust set of the slides that you'll see today. And then Cider fact sheet is just a 1-pager fact sheet that we thought would be like the basics of helpful information that you would want to know for cider. So with that, I will jump into the meat of today's presentation. Emily has a question.
Yeah, I was just going to say, are you able to post those links in the chat?
Oh, sure.
Or maybe Alice can help you while you're talking.
Yeah, actually, you know what? I'm going
Janelle.
to ask Jennifer to help me out. Jennifer, would you
I
be
was-
able to?
You were reading my mind. I sure will.
Thank you. Yeah, if you could put all of those that I just mentioned in the chat, that would be awesome. All right. All right, so I always want to start out the explanation of how cider is regulated with the federal legal overview because it is complicated because the products some of them are governed by 1 statute only, others are governed by 2 statutes. So it's really helpful to go over those statutes so you can understand what regulations apply to your products that you're producing. So how do we even define cider? So because we're working with 2 different statutes, we have different definitions, but these are some of the things that go into it. There's the hard cider tax class, there's different labeling designations, and then there's also production standards. And based on how they're regulated, all of these things are impacted. Permits, production standards, reports, labeling, excise taxes, formulas, record keeping. There's a lot of information and a lot of different nuances to it. So let's go through it. So you want to start out by asking yourself some questions about your products. So if it's under 7% alcohol by volume, if it's sold across state lines, that's going to indicate whether or not is subject to the Federal Alcohol Administration Act. Whereas some of the other ones, is it made primarily from apples, pears? Is it under 8.5% alcohol? Is it less than 0.64 grams of carbon dioxide per 100 milliliters? Are there added fruit flavors? Those are all questions that you're going to ask yourself about the hard cider tax rate. And then imported, that one's pretty self-explanatory. So as I had mentioned, there are the 2 federal statutes. So we have the Internal Revenue Code, and that is our collect the revenue statute. That's what we kind of informally refer to that one in-house. And then the Federal Alcohol Administration Act, that is our protect the public statute. That was passed just at the end of Prohibition. And so that one, the intention of it is really quite different than collecting taxes. It's really to have a good regulatory framework around the way that alcohol is produced and sold to keep consumers and the public safe. And then finally, there's the Alcohol Beverage Labeling Act, ABLA, that is applicable to all products, 0.5% or more alcohol by volume. So with the Internal Revenue Code, the specific provisions in there are, it does require that there's qualification or registration of bonded wine premises. So you will register as a bonded wine premises. There are production requirements. So it will detail if you produce your product this way, it is classified as this, whereas if you produce it that way. So formulas, it does require that some ciders have formula approval, and we'll get into that just a touch. Record keeping and reports, which we'll go into, taxes, and then basic labeling and marking. So really not a lot of labeling regulations in the Internal Revenue Code, just a few basic ones that we'll cover. And just to note, it does apply to all ciders 0.5% alcohol by volume or more, regardless of where they're sold. So if you are making what is called an alcoholic cider or an alcoholic beverage product, it is subject to the Internal Revenue Code, because under 0.5% is not classified as an alcohol beverage product. So in the Internal Revenue Code, so as I said, ciders are wines. They're separated into standard wine and then other than standard wine. And really the reason that this matters is because it impacts whether or not you need a formula approval. So a natural wine might just be a cider, maybe with some carbon dioxide added, but it does not require formula approval. It does not affect the tax rate. So tax classes for cider, we're going to get into all of this, but just for a primer rationale, there are 6 different tax classes. So the ciders that you're producing could fit into one of 6 different tax classes. And it's going to be determined by the alcohol content, the level and origin of your carbon dioxide, and then the ingredients that are used. So depending on how it's made, it may or may not be eligible for the hard cider tax rate, which we'll get into. So the Federal Alcohol Administration Act, very different in terms of the products that it covers. So instead of 0.5% or greater, the FAA Act only applies to 7% to 24% alcohol by volume wines that are sold in interstate commerce. And as we go through it, we'll talk about if your product is within the 7 to 24%, but it's not sold in interstate commerce, it's sold only in the state that you're producing it. But broadly, if you're selling it widely on the internet, even if you're distributing from Washington to Oregon, that would be interstate commerce. And if it's 7 to 24%, all of these provisions would apply to your products. So that would be the labeling requirements, which we'll go over. The fact that you would need either a certificate of label approval or an exemption. Right now, those are running about 7 days, but our customer service standard is to issue those in 15 days or less. They usually take significantly less than 15 days. The qualification is that's your basic permit. That's going to be your bonded winery premises. Or maybe you're going to apply also as a wholesaler or importer. And then it also has advertising and trade practice regulations, which again, we won't cover today, but feel free to ask questions. And then finally, as I mentioned, the ABLA, that applies to all cider products, 0.5% or more, well, all alcohol beverage products. And this is the format that it has to be in. It doesn't have to look exactly like this, but there are stipulations about how it has to appear. And it's one of the most common reasons that we send label applications back for correction, is that something is wrong in the government warning statement. So this is just a handy chart for you in the future, that if you get confused about what statutes apply to your products, you can just look at this and say, well, I'm making a 7% cider that is only sold in intrastate commerce. So it would be, no, the Federal Alcohol Administration Act does not apply. All right, so records. I included a lot of slides in records because I want you to have the information, but I'm just going to go over it at a very high level. But basically, if you have your permit, or registration, you're a bonded winery, you are able to receive, produce, do all sorts of things with your wine and cider. You're going to use it in wine production. You're going to receive, use, and remove materials for production and treatments. And you're also going to prepare, store, and remove commercial fruit products, or you can, and byproducts. So in the Internal Revenue Code, the basic records, it generally says that it must be generated for almost all of your cidery operations. They have to support your tax payments. So that's really a reason that we have these, to support your tax payments and to support your label claims. And then they are used to complete your operational report. So you'll find that as you go to fill out your operational report, it's going to be so much easier if you've kept really good records along the way. To look up what records you need, it's in the Code of Federal Regulations. So the implementing regulations for the Internal Revenue Code, that's at 27 CFR Part 24, Subpart O. So that's where you'll find that. And most of the pitfalls that we get into with filling out your operational report, with your investigations, those can typically be avoided with good records. So just make sure that you're keeping good records. So what is a record? It documents what it is and what you did with it. So you're going to record your materials received and used. So you're going to record your apples, your pears, your treatment materials, your acid and chemical records. You're going to document every step of your cider or perry products that you produced, or that you received or transferred in bond. And then also you're going to record and document everything from when you remove those taxable products. So you want to record your records, or you want to record your operations as they occur. It's going to be so much easier to take timely notes on everything than at the end of the month try to recall what you did. So definitely do it as they occur. And you want to get and retain source documents. So if you're purchasing fruit or purchasing equipment or supplies, I guess the ingredients that are going into your products, you definitely want to retain those source records. You're going to accurately identify your alcohol content and your quantities. We'll go over that. And then keep in mind the alcohol content and other required information to keep just to keep records of the type of product that you're producing. And you do want to retain those records for 3 years, and they are all subject to inspection by TTB. So what our goal is with your records, we want to be able to see if your product is properly labeled. So if you have claims about your what's in your product, your apples, your tax rates, we need to be able to verify all of that, and that they're fully supported. We also want to be able to show that only authorized materials were used. Some treatment materials are not authorized for use in the United States, and we need to be able to see that you are only using those that are authorized. We want to also be able to see that your advertising and your point of sale materials are appropriate. So again, being able to show that what you're claiming about your product is actually true. And then if you do have to have a formula, we want to make sure they're in compliance with your approved formula. So I'm not going to read through all of these, but I wanted to list them out so you have them for future record. So you do want to keep, you want to record your receipt of materials. So acid, sugar, chemical, and spirits. Some other records may be necessary, but they may not be. But if you are making an effervescent wine, a formula wine, or if you're returning anything to bond, those records would be necessary. If you have any bulk wine or still hard cider, so you want to record your volume produced and your method used, your volume received and removed, your volume used for tax class blends, and you want to make sure that you're separating out those records by tax class. You also want to record your bottling and packing information, so keep good records on that. So if you are, you want to record your volume and size of containers filled or received. Again, you want to record your tax class and your kind of wine. We'll go through that. And then the results of your fill and alcohol tests. Those are going to be important, and those will substantiate your alcohol content claims. So your fill and alcohol test. So you want to take your alcohol test before bottling. And they should agree with the alcohol content statement on labels. We do have tolerances allowed for that. There is no tolerance for crossing tax classes. But for 7% and under, there is a 0.75%, I believe, tolerance. And then for 7 to 14% is 1.5% tolerance. But again, you can't cross tax classes. So if you are let's say, and we'll get into the hard cider tax rate, but if you are trying to get that and you label your product at 8.4%, there is no tolerance to go above to 8.5% or greater. It has to stay below 8.4% alcohol by volume. And then your fill samples should be taken at representative intervals. So we want to make sure that your products are full to the adequate and appropriate level, and that you're not testing all of the products like at the beginning of the bottling line or all at the end of the bottling line. And they, again, should all agree with your net contents on this, the net content statement on the label or bottle. So we've included some samples that you can refer to in the future. So this is just a sample batch record, a bottling record. And then, so once you've produced your products, and they are tax, if the tax has attached to it, there are some allowances for unpaid taxable removals, and you're going to really need to detail your records with that. So if you're doing tasting on bonded premises, so a small amount of tasting is allowed for sensory purposes on the bonded premises that does not have to be tax paid. If you're doing analytical testing, if you're removing it for family use, if you had breakage, or you're destroying something, if a batch spoiled and you notify us that you are applying for destruction, then you could destroy it without having to pay your tax, or if you're exporting. So those are all situations in which the tax would have attached, but you can remove it untax paid. So if you transfer it in bond, you need to keep records there as well. So that would be for bulk or bottled. And you do need to just make sure that you have any of your supporting documents that contain information that the bottler may want to use. So if you're transferring your product in bond and somebody else will be bottling it, they would need to know if you're contract producing it for someone and yet they are bottling it, you would want to transfer it and make sure that they have all of the information to be able to label it themselves. And there is an FAQ online if you are transferring unlabeled bottles of cider. We call those shiners. So look that up if that is a situation that applies to you. And this is just a sample transfer and bond record. So for those products where the TAC is attached and it wasn't one of those that qualified for untaxed products, you are going to keep very good records of your taxable removal. So it's all of your products removed from the bonded premises for consumption or sale. And that does include tastings away from the bonded premises. So there was that small allowance for tastings on your bonded premises. But off, that is going to be a taxable removal, and you'll need the records on those. An invoice is an acceptable record, and they must be summarized daily by tax class to the nearest tenth of a gallon in order to be properly tax determined. So I'm just going to give you a second to think about that. So summarize daily, tax class, nearest tenth of a gallon in order to be properly tax determined. And you're going to include the name and address, volume, kind, and alcohol content. And then you're going to pay your taxes either annually, quarterly, or semi-monthly, depending on your production levels. So here is a kind of hard to read example, but it will be in the slide deck for you. And then for your label information, again, we just need to be able to substantiate your label claims. So we want to be able to see your receipt records, your crush records, fermentation, and storage. And then inventory. So you do need to complete at least one physical inventory annually. So if, for example, if you are going to, if you're a quarterly file, if you're going to do it on the period ending June 30th, or you can notify the National Revenue Center and let them know that you're going to do it a different time. If you're an annual filer, you're going to do that December 31st, or again, you can notify them that you're going to take your inventory at a different time. You'll keep records on that. And here is what your records need to show. You want to have the description of the product, the volume totaled separately by tax class, All pages of inventory records must be consecutively numbered. And then the last page, you have to have dated and signed with person with citing authority under penalties of perjury. And I'll just jump in and see if Alice wants to add anything with inventory. So this is something that my understanding from investigators is that people sometimes don't understand that they need to do. So again, if you don't want to do it on one of these specified dates, just notify us and do it a different time. And then you will keep the record, you will keep your inventory record on site. Alice, did you want to add anything to that?
Yeah, I'll just add that it's very common for us to go out and find that people are not signing under the penalties of perjury. And so just make sure the regulations does tell you exactly what that statement has to include. And so make sure you're including that in there. It doesn't matter to us if you're printing out your inventory and then writing out the penalties of perjury, or if you're adding it to your, let's say, Excel document and digitally signing that, that's okay as well. But do make sure that you have that in there. And as Janelle also mentioned, if you want to do the inventory at a different time and date that the regulations specify, then you would request a variance or permission to use an alternative method from the NRC.
Alice, do you have any other top record tips for them?
Sure. So on batch records, if you're doing a formulated product, you need to include the formula number. So that's another common violation that we cite, is people don't realize to include that on there. So onto all of your batch records, however you're going to keep that, I always recommend you add a line for formula number. So in case you're doing a formulated product, you can do that. The other big thing that comes up quite often is when people are using mobile bottlers. Those mobile bottlers often do not provide to the industry member proof of doing alcohol and fill testing. And so you want to make sure that you're either doing your own alcohol and fill testing, or you want to work with your mobile bottler to come up with some sort of language that's going to be in the receipt that they provide to you that shows that they have met the requirements in the regulations. And then you would want to keep that proof on file. So if I were to come in and ask you, are you doing fill and alcohol testing? You could say, no, but my mobile bottler is, and here's the proof of that. I think those are kind of the big issues that we typically see with records.
Super, thank you so much. And if you have questions about records or anything else that we've covered so far, hit those in the chat, and then we'll address those at the end. Okay, so again, so keep your records by tax class. You can keep it in liters or gallons. As I mentioned, retain them for 3 years from the entry. And then if you're wondering what format your records have to be in, computerized records are fine. Sometimes I think Alice would say that sometimes she finds things on Post-it notes or, just pieces of paper. So as long as the records are documented, we're not so particular about the format. If you do have computer records, the software must capture and retain all of the required information. And if they're maintained somewhere else than your premises, you need to be able to retrieve them within 5 business days. So any records can be requested on demand and then need to be produced within 5 days. Did I get that right, Alice? Okay, confirmation.
Correct, yeah. And if there is some sort of circumstance that's rare or unusual that has come up that's going to make it so that you can't meet that, then just be upfront with whoever's requesting them. And I think most of us are pretty reasonable, and we could understand if there's a rare circumstance that's going to delay it.
Excellent. All right, so if you do have more questions on records, there's the National Revenue Center contact information again, or you could contact Alice or myself and we'll get those answers for you. All right, so really quickly with taxes, I want to hone in on what I think is the most biggest potential pitfall of taxes, which is your tax rate potentially not being what you think it is. So we're going to really talk about this and make sure that you're producing a product that will be taxed at the rate that you think it's going to be taxed. So the tax attaches when the cider is produced, and then it's determined when it's removed from bonded premises. So as we talked about with records, it's attached once you have it, and then once you know that it's going to be removed and is taxable, that is when the tax is determined. And then it's paid at a later date, and then it's based on the alcohol content, materials used, and or production method. So let's talk about that. So as I had said, there were 6 different tax classes that could apply to your cider. The first one is your still wine tax class. So that is separated by alcohol content, but anything 16% or under would be a still wine if it has 0.392 grams of carbon dioxide per 100 milliliters or less. So again, that would be 16% or under with that level of carbonation. And the full tax rate for that would be $1.07 per wine gallon. But with the tax credit that you will get because of the Craft Beverage Modernization Act, where it reduced the tax rates for these products, you're going to get $1 credit for your first 30,000 gallons. And so you're only going to be paying 7 cents a gallon. So this is really important when you are thinking strategically about your production and about your tax rates. So if you are producing less than 30,000 gallons, 7 cents per gallon is a really attractive tax rate. If you're going over that, it goes up to 17 cents a gallon, and that is up to 130,000 wine gallons. And then it jumps up to 53 cents and then up to the full rate of $1.07. And I imagine most of your products are not in these other tax classes, so I will just leave them there and you can have them for future reference. So another tax class, the artificially carbonated wine. So if you are injecting carbonation into your product and you're having it over 0.392 grams of carbon dioxide per 100 milliliters, then it is going to be the full tax rate is $3.30. And you again still only get that $1 credit for your first 30,000 gallons. So you're paying $2.30 a gallon instead of 7 cents a gallon. That's a huge difference if you accidentally, well, I will save that for the hard cider tax rate. So, but it is a very big tax discrepancy between these. And then you'll see with sparkling wine, that's going to be your naturally occurring carbon dioxide. It's just a little bit more. For that first 30,000 gallons, we go up to $2.40. And these numbers are for all of your products. So no matter what type of product you're making, it is your first 30,000 gallons of cider that you're producing, not the first 30,000 in one specific tax class. So hard cider tax class, we are going to go into this in detail because it is only the full rate is so much less than wine. It is basically 22 cents per wine gallon and only 16 cents on the first 30,000. You only get a 6.2 cent credit, but you're starting with such a low tax rate anyway, it drops it down to 16 cents. So to get that hard cider tax rate, well, it will either be eligible for it or it will be eligible instead. Well, it will either be eligible for the hard cider tax rate or it will not. And if it is not, then it is taxed as either a still wine, sparkling wine, or artificially carbonated wine. So it is the name of a tax class, the hard cider tax class, and these are the qualifications for it, or the factors. So it cannot have more than 6.64 grams of carbon dioxide per 100 milliliters. So it jumped up from that, from the still wine allowance. Now you can have up to 0.64 grams. It has to be derived primarily from apples or pears or apple pear concentrate and water. And this is an important one. It cannot contain any other fruit product or fruit flavoring other than apples or pears. So it can have spices. It cannot have fruits. So just be aware that if you want to add some like citrus zest to it, to kind of punch it up a little bit, that would be a fruit product, and that would kick it out of this hard cider tax class. But if you wanted to add cinnamon, that would be fine, and it would still qualify. And then importantly, it cannot go, it has to be less than 8.5%. So it cannot be 8.5%. It has to be under 8.5% alcohol by volume. So these products would fall within it. So you've got your still hard cider. Let's say you have that 0.392 grams carbon dioxide. That's fine. That would work. Artificially carbonated, it can be, you can have up to 0.64 grams artificially injected, or sparkling hard cider. So even though it has to be labeled as artificially carbonated or sparkling, it does still qualify for the hard cider tax rate. So these are just hypothetical examples of products that would qualify for it. You could have an 8.4% ABV, and just note that we use ABV here just for shorthand, for simplicity and slide sake. You cannot just have ABV on your label if it requires TTB approval. It has to be alc by vol or alcohol by volume. But so an apple cider, 8.4 Perry, 6%, it can be apple cinnamon, 8% carbonated apple pear wine. So these are all different ways that you could label products, or you could have an 8% sparkling Perry or sparkling cider. So again, these are just hypotheticals that do qualify for the hard cider tax rate, but let's look at some that do not qualify. So maybe you're making a 15% apple cider. That is too high. It would be a still wine. It would be in the still wine tax class of 16% or less. A 9% Perry. Again, it's over 8.49%. So that would not qualify. 6% apple raspberry. So that one, the alcohol content would work, but it has raspberries in there, so that's going to kick it out. An apple or a carbonated apple pear wine of 0.7 grams per 100 milliliters. That has too high of carbon dioxide, so that is not going to be eligible. That would be under the artificially carbonated wine. And if you think that you're paying 26 cents per gallon, and instead you find out that you're paying $3.30 per gallon, it's going to be, that's what we want to keep you out of. And then finally, on this slide, a sparkling pearly pear. Again, you've got too high of carbonation, and it's going to be taxed at the sparkling wine tax rate. So it is quiz time, and you can enter your answers in the chat. And the TTB folks you're welcome to play as well. But so let's say our first product, we are going to have apples and cinnamon. So it's going to be a cider with cinnamon. It's going to be 7.2% alcohol by volume with 0.64 grams of carbonation per 100 milliliters. Does it qualify for the hard cider tax rate? And I can't actually see your comments because I'm sharing screen, but I'm going to be confident that you are commenting. So what do we think? Yes, no, hard cider tax rate? Yes, because it meets the ingredient requirement, the alcohol by volume, it's less than 8.5%, and it has that 0.64 grams, so it does work. The next one, I hit the button too soon. The next button, it has apples and peaches, 6.9% alcohol by volume, and then 0.43 grams of carbon dioxide. So why doesn't that one, I'll ask the question the other way, why doesn't that one qualify for the hard cider tax rate? Yes, it is because of the peaches. I'm going to assume that somebody said that. So the next one, apples at 8.5% alcohol by volume and 0.62 grams of carbon dioxide. What do you think? Does that qualify? No, and it doesn't qualify because that the alcohol by volume cannot be 8.5%. It has to be under that. All right, the next one, it is an apple cider. It is 5% alcohol by volume, and it has 0.81 grams of carbon dioxide per 100 milliliters. Does that one qualify for the hard cider tax rate? Correct. It does not, and that is because the carbon dioxide level is too high. And then finally, we have a pear product, a Perry, 8.4% alcohol by volume and 0.55 grams of carbon dioxide. What do we think? Does that one qualify? Yes, it does, because it meets all of the qualifications. So hopefully this was helpful in being confident that if you think you are getting the hard cider tax rate, you are. But let me also note that there are instances where it doesn't make as much sense to take the hard cider tax rate. If you are producing less than 30,000 gallons and you are under the carbon dioxide level for still wines, it might make sense for you to instead take the still wine tax class for 16% or under. So you really just want to look at those tax rates and think about what does it make sense for you to pay, and then make sure that you are being taxed at the rate that you think you are. If you have questions on that, we have more tax resources. Or again, you can ask any one of us and we'll get you the answer. So on to labeling. All right, so as you all, I'm sure, are aware that TTB labeling regulations under the FAA Act do not apply to all products. So first, it's going to depend on your alcohol content, and then if it's introduced into interstate commerce, or if you're just producing it and selling it in the same state. So other things also impact your labeling, such as your effervescence, your fruits, your spices, and if it's domestic or imported. So again, there's a lot of nuances to it. So we have the chart that you can look and see what laws apply to your product. So we have it divided out by, are you 0.5% to under 7% alcohol by volume? Or are you making something that's 7 to 24 and then divided into whether it's in interstate commerce? But for all of your products, again, it's going to be subject to that health warning statement. You can copy it out of the slide and put it on your product. You can go to our website. But again, a lot of people make typos in this. The punctuation has to be exactly like it's in here. The government warning words have to be bolded, and it has to be a continuous paragraph. So just make sure that you're following the formatting requirements. And I noted that it's on our website. So under our wine labeling pages on ttb.gov, you can go to our website, go to wine, go to labeling, and those apply to the cider products, right? Because they are regulated as wine. And there's a page on this, as well as all of these other topics we're going to cover today. So when is the COLA required? As I said, it's only going to be your products that you're producing that are 7% or more alcohol by volume. And that is going to be if it's in interstate commerce. If it's not, then you can apply instead for a certificate of exemption. So the difference is that you don't have to follow all of the same rules if you are applying to be exempt from those rules, but you do still need to file for that and get your certificate of exemption. Alice is going to ask for it if she ever sees you out in the field. All right, so just quickly, the mandatory labeling information. So if you are making the products 7% or more alcohol by volume, these are your mandatory label information: your brand name, your class type or other designation, the name and address of the bottler, the net contents, the alcohol contents, and the government health warning. And just to note, it is going to be the bottler who is responsible for getting that COLA, so whoever bottles the product. You also need to have a sulfite declaration if you have 10 parts per million or more of sulfur dioxide. And if you do not want to have that on your label because you have less than 10, you do need to submit an analysis with your COLA so that we can verify that you do not contain sulfite, but you don't need to say anything on the label then. So I wanted to just quickly touch on the standards of fill. So these are the allowable sizes that you can put your products in because they changed recently. So in January, we did add several new sizes to our allowable standards of fill for wine, cider products. We heard a lot from industry members and from the American Cider Association that it was really important to cideries to be able to compete with beer, especially in the single serving larger cans with their higher alcohol content products. So it would be something that would be subject to the FAA Act requirements. So we expanded the different sizes that you are allowed to package those in. And then you can bottle or pack in containers of 4 liters or larger if the containers are filled and labeled in quantities of even liters. So you can have 5, 6, 7 liters. And then the blue shaded ones are the new ones that were just authorized in January.
Janelle, can I add something here?
Yeah.
So one of the things that we've noticed since the new addition of sizes of fill is that when people are now using a smaller fill size than they were traditionally using, they're just basically shrinking down their cola when they're sending it off to be labeled. And so what's happening is that the government warning size is becoming too small. And so, because when you shrink it down, now we're seeing cans and it's below, I think it's the 1 milliliter size, I want to say, of font. So just be aware that don't just shrink your whole label down, make sure that the government warning is still meeting size specifications.
That is an excellent tip. Thank you. And there are minimum type sizes on all of the mandatory label information, so you're definitely going to want to check those as well. So these are our classes and types under the FAA Act regulations for wines and ciders. Ciders fall under the class 5 fruit, but if they don't fall under fruit, anything that doesn't fit within any of these classes is a wine specialty product. And the difference is that if you don't fit within a standard fruit wine under the FAA Act, or if you're making other wines and it doesn't fit within those, and it is a wine specialty product, it has to have a truthful and adequate statement of composition, and it requires formula approval. You're going to get that statement of composition when you get your formula approval. It's going to come back and have a generic statement of composition. You can make it more specific, but you do have to have that on there if it doesn't fit the type, the class of fruit wine and the type of cider or other fruit wines. So that's typically going to be when you add flavors, colors, or spices, or when you're blending different types of fruit wines together. You can co-ferment, and it's a wine that wouldn't require a formula, but if you are fermenting apple cider with blueberries and you're making a blueberry apple cider, that would not be a natural wine. It would instead be a special natural wine. It would be, and it would require a formula approval. So if you want to simply label something cider or hard cider or apple wine, it needs to be derived wholly from apples, except for those sugar, water, or added alcohol. You are allowed to add alcohol from another alcohol, derived an alcohol spirit, without needing to note that on the label. But you might still have to put in your effervescent designations if you are going above that 0.392 grams. So although the changes to the hard cider tax rate allows it up to 0.64 grams, you do still need to have the labeling designation on if it's over 0.392. So two different statutes, two different requirements there. So if it's, let's say if you have excess sugar or water, if you have things other than apples or pears, or if you've added spices, you can't just say cider or apple cider. So these products would be eligible for the hard cider tax rate, but they can't just be labeled cider or hard cider. Because the first one, you've got apples and pears blended together, so you would need to note that. The second one, you would need to indicate that it has spices on it, coloring or spices, and again, you would need formula approval. Or if it has that greater than 0.392 grams of carbon dioxide, then you're going to need to call it either sparkling or carbonated. All right, so here's some quick examples. So if you are fermenting two kinds of juice together, that is allowed. It is still a class 5 fruit wine. You can just call that blueberry cider or apple blueberry wine. So that is totally fine. Does not require formula approval. But as I had mentioned, if you're blending two kinds of fruit wine together, then that changes the definition. It no longer fits within the class 5 fruit wine. So then instead, it is a specialty product and it needs a statement of composition. So it can be, so the fanciful name here is Blueberry Apple Delight. And then we have our statement of composition, Blueberry Wine Cider. Here we have it with cider with honey and spices. So again, requires formula approval. And I mentioned that you could add apple spirits to your cider or pear spirits, I suppose, for Perry. But you cannot, it has to be a light kind. So apples has to go with apples, pears has to go with pears. If you wanted to put grape spirits in your cider, you would need to submit a formula and you would have to indicate that on the label. So really quickly, cider in the brand name. This is a really important tip, especially as you're getting started. If you are selling either in trust state or you're making less than 7% ciders, you might think, I want to be called, in this case, Mia Cider. If you go above 7%, or if you go to 7% alcohol products and interstate commerce, you are locking yourself into only being able to produce cider products. So let me give you an example. So if you instead wanted to produce a pear-flavored cider with other natural flavors, you could no longer just call it Mia Cider, but you could call it Mia Cider Company. So if you plan to grow, expand your distribution, expand your product line, it's really helpful to have the word company or some kind of other qualifier in your brand name and not just have cider. Because again, that would just lock you into producing cider products if you start producing products that are regulated by the FAA Act. And then in a fanciful name, a cider in a fanciful name, it can be used in conjunction with the word flavored. So you can have pear flavored cider. Really quickly, optional label claims, you can have appellations that would be a state or a county, but you cannot have AVAs. Those are specifically for grapes. And it can't be something that is misleading that might be construed as an AVA. So even in the romance language on the back of your product describing it, there can't be any indications or anything that might mislead it to being an AVA. You can, however, have your orchard, farm, or ranch name, but 95% of the product has to have been produced there on the named orchard, farm, or ranch. You can also have gluten-free. That's a really popular one with cider products. And organic. There are regulations as far as organic, and you would need to submit supplemental information with your COLA application, so definitely check the requirements on that. And again, all of this information is on our website. And then finally, vintage dates. Vintage dates are not allowed. Harvest dates are not currently allowed. We're hoping that, well, me personally, I'm hoping that might be offered or allowed at some point in the future. But for right now, it's not part of our regulations. So you can't have harvest dates, but in lieu of that, you can have bottling dates. So you could say bottled in and then the year that you're bottling it. So that's sort of the workaround if or until harvest dates are approved. And then if you are under 7%, you probably know this, that it's subject to the FDA and not TTB. But there are certain mandatory labeling informations that the Internal Revenue Code requires. And importantly, you do need to be able to indicate the tax class that you're in. So the easiest way to do this is to have this statement, tax class 5041B6, somewhere on the label. So as we talked about, it isn't necessarily indicative of if it's effervescent or if it's just cider. We need to be able to know what tax class it's in and if you are claiming that hard cider tax rate. We have labeling resources. I know that was a whirlwind, but consult these. And again, ask us your questions, send them to us. Happy to answer. And then finally, I will wrap up with, we do have a project going on right now to simplify how we're doing our operational reports and tax returns. So we've undertaken this years-long effort to simplify the way the way that you're filling out the forms. And we're also merging the operational reports with the tax returns and syncing up the return filing frequencies. So we have produced a pilot form and we are asking for feedback on it. So what you would do is take your most recent tax return data, enter it instead into this form, well, your operational report and tax return data, enter it into this form that is currently being piloted, and then let us know if it works for you. And specifically, we want to know if the instructions are good. Jennifer, is there anything you want to add to that? And is there an end date for this?
Yes. Hi, everybody. Nothing else to add. We are taking surveys through mid-April-ish. So yes, please scan this QR code and let us know what you think. It should take roughly 30 minutes to do the survey, which I know isn't necessarily short, but it's also not super long. So yeah, we really would love your feedback so that when we go to the next phase of this pilot, we can add anything that we get from your feedback.
And I think that most of our industry members that are wineries are grape wine. And so we have gotten feedback from them, but we really do encourage feedback from the cider industry. We want to make sure that it works for you.
Exactly.
Janelle, if you have that language and QR code, I could send out in an email to our members. I'm happy to send that out.
Absolutely. Jennifer can email it to you.
Wonderful.
And then finally, I know we are a couple minutes past time, but I also wanted to quickly mention that we are right now changing our systems. So Permits Online, which if you are operating, you are very familiar with, Permits Online will be reaching its end of life with the software provider. At the end of 2025, they will no longer support updates to it. So we are developing our own permit system in My TTB Permits will be the name of it, is rolling out later this year. It's going to simplify requirements. It's going to let users do more self-service options. It's going to be easier to navigate. And it is rolling out later this year. And so stay tuned either through the newsletter or our website or through keeping up with your associations when we have webinars or other helpful tutorials on how to use that. So stay tuned for more information on that, but it will be coming this year. And with that, we're ready for questions if people want to hang on. But I will leave it to you, Emily.
Fabulous. If folks have questions, put them in the chat or